Hello, Ashley. Can you hear me?
Yes, I can. Hey, howdy, howdy, howdy. How you doing?
Howdy, howdy. Good. How are you?
I'm good.
Are you also
Coming.
listening to the music?
Oh yeah, of
Yeah,
course. I'm bopping along. Yeah.
that's your favorite song, no?
Oh, it's just wow. Anything Pink Floyd, man. But yeah, money's pretty good. I
Yeah.
like that. Yeah, yeah.
So it's also a good trading song. I was looking at the
Oh
YouTube comments of this song, and one said, "This is my favorite for trading."
yeah, 100%. Yeah, it's really good. Yeah, I love it too.
All right, you ready to start? You wanna be back in a minute?
No, I'm good. I know. I got my water. I'm ready to go.
Oh, okay.
We
So
should just get going.
we jump right into it. Let's go. Okay.
Yeah, yeah.
Okay.
All right. Okay. Welcome everybody. Ashley, Isaac. Don't know where to point, but so we're coming to you from rainy Vancouver. So this is number 11, the
Mm,
number 11 podcast. So
yes.
February 22nd, 2025. So it's been an interesting couple of months this year. So, well, what are we going to talk about today? I don't think we're going to do much about Trump. We've had enough talk about
Yeah.
Trump. I think there's a lot going on in the world, but
I think it's also slowing down a bit.
well, I think he's starting to hit a bit of a wall, isn't he? People are sort of kind of pushing back a little bit at what he's trying to do. And, so we'll see. It's
We'll see.
yeah, but yeah, and I think globally the world has kind of said, yeah, okay, yeah, your tariffs fine, blah blah blah. Like I said before, it's part of the look at Canada, look what we did here, right? We just embraced the shit out of it. And, you know, we played a hockey game and stuck it to the Americans because it's this is like what we do. you
No,
know.
what
So
was the thing that changed the national anthem? What did it change it?
oh well, she changed just a word like in all thy command is all we command. Like nobody tells us what to do.
Mm-hmm.
It's the singer. She did it. She did it herself. She changed it, but she sucked. She did a terrible job. But I think it's because she was so hyped up and so like
Yeah.
nervous and wanted to get the point across that she admitted she kind of screwed it. It wasn't very good. But
Mm.
the funny thing was, I was watching the game. My son was watching the game with his girlfriend somewhere else. And we talked afterwards, and when those two. When the two national anthems played, I'll give you the context. We had one singer, and she didn't sound very good, obviously. And the crowd booed the Canadian anthem, right? And then all of a sudden, the American full orchestra, big opera singer, right? So it was really, really emotional, really blast out. And I'm like, I said, "Oh, you guys did that on purpose. You messed that up on purpose." Conspiracy theories, right? We think, you're just trying to gain an edge, so you got a singer to screw up the Canadian national anthem, so we could get pumped. But it was kind of funny. This is just the way we think. We're just batshit crazy about stuff like that, right? But yeah, it was good. It was exciting. So yeah, we Canada needed a win. Canada needed that. Yeah, it was good. I know you're not into that, are you? You're not into hockey.
No, but this one looked like very very exciting. So maybe I'll watch the highlights.
Yeah, you have the best hockey players in the world playing, right? And it's great. It's just such high end, just so cool, just so exciting. It's just anyway, I still think hockey's the best
Sport.
sport in the world. Yeah,
How about
it's
soccer?
by far. Well, I used to really. I mean, I'm a soccer guy. I used to love soccer, go Chelsea, right? But I the last 10 years that game has changed, and it hasn't changed for the good. It's I don't like it anymore. I used to watch other games, not just Chelsea.
Mm-hmm.
I can't do it. I
Mm.
go, this is crap. I'm turning it off, and I don't like how the players have gotten their attitudes, and I
Yeah.
don't know. It's just the whole game's changed.
Yeah, that's
It's
true.
not like it was. I mean, I'm not saying it should go back to the 70s where everyone's hacking each other and stuff. No, that's not what I'm saying. But 10, 15 years ago, the game was really good, was
Hmm.
really good. And maybe I'm partial to my type of players, but it's changed. It's different. Don't like it.
Yeah,
So, yeah, yeah. So, there
makes
you go.
sense.
So, but I would always watch England play, of course, and Canada play internationally. I always watch that. But even that is kind of, oh, what kind of game is this? This is crap. But yeah, I used to like rugby too. I like rugby, but hockey, give me hockey. That's it. That's all I want. Give me hockey. There you go. So, how was your trading last week?
Very interesting. It was
Yeah,
an interesting week, because I don't think we got much of like crazy news on like in the world, like in the past weeks. Like at least I haven't seen. I don't know. I might be wrong. Yeah, I know there was like a Fed meeting, but like didn't impact much in the world. But what I noticed and what I was telling you a bit earlier is that we discussed about Meta last podcast, and you predicted it. It was like very clear what was coming.
crystal ball, huh?
Yeah, it was
Yeah,
yeah, it was not. I mean, I had this thought that it's overextended. The logic tells you what's going to happen next, but you define it with the levels and put it more clear on the charts, and it was like very very clear that we had this retracement with this pullback. It was just a matter of time to have it,
yeah.
and
And yeah,
yeah, and we had it on I think Monday, like right away, right after the podcast, boom, drop, and then
yeah,
the following days drop, drop, drop. But now, because we discussed about Meta, I lock in the profits. I was up like 20% on that trade, and I was very happy. But what I didn't count, what I didn't think of, is that the rest of the stocks would do the same. Like not only Meta, because Meta was very clear, 20% up, but other stocks, famous stocks like uh, that are in the S&P 500, like let's say Palantir, Nvidia, even Tesla. What is it? Walmart. Walmart was massive. They were like up 3, 5, 6%, and they were doing really good over time from the past weeks, and then I think it was like Monday, Tuesday, Wednesday it started everything coming down, everything dropping, and I didn't lock profits on those. Like I was up on the positive up to 10% in some stocks, and because I didn't lock profits because I wasn't paying attention to them, like I was like I gave them I I gave them for granted. Oh, they're doing good. They'll continue doing good because it doesn't look like that overextended. But I was wrong, and now the market closed in the red like crazy. But I think it's a good opportunity to buy because it's like a natural pullback, right? A profit taking, and we can buy low again. But my frustration is I should have locked profits when I had the chance, and I just didn't see it. And you mentioned it, like you had this kind of magic numbers where when you are up a certain number, you get out, and when you have a stop loss, you're like this. I remember it was 3%, then you also get out. So I think that's what I needed this
yeah. I
week.
think lesson learned, right, for you, right? I think part of it, you were very excited that you got out of Matter and made your money. And, I think that may have clouded your judgment on the other ones. And it's like, oh, I'm good. I think you have to remember with the stocks, when you're trading the big guys, and I'm talking about the S&P 500 stocks, not penny stocks, not cheap stuff. So that's run by the Super Seven. Is it called the Super Seven? Right?
Magnificent.
The Magnificent Seven. Not so magnificent right now, but
Oh no.
You remember when you told me that uh, what's his name, Mark
Mark Zuckerberg.
Zuckerberg
Yeah.
was pumping up Meta, right? He was
Yeah.
doing the pump, and I said, "Oh, classic pump and dump,"
Mm-hmm.
and this has happened over time, and it'll always continue to happen. Is that, and this is a good awareness for you new traders out there. When you hear somebody from a company that is pumping up his company, they're doing it for one reason. They're doing it for a reason to get the price up so they can dump it and make more money and start again. And I don't know, I think I said this last week or a few weeks ago, I can't remember, but stocks are made specifically to go
Up.
up.
Yes.
They're made that way. But you can't go up forever without coming back down. You can't buy, you don't want to buy too high. That's why a lot of the times you hear buy the dip. And I said to you, be careful of buying the dip because you need to buy the dip at somewhere significant that you know it has a good opportunity to go up. So that's making sure the dip is landed at a level or landed at a support or somewhere where it makes sense. And whether you guys believe it or not, you need to develop, and you're starting to develop your spatial awareness. When you look at a chart, you start spotting those areas that where the market could go to,
Yeah.
and that's not. It's by design. That's not out of the air. The market does that. So yeah, I mean, you also have to remember when one big guy starts hurting, look at the other big guys, and there are guidelines and rules of what I've put in place that are what I would look at, and they're based on highs and lows and opens and closes and all that kind of stuff, and that's very prevalent, I think, for stocks. So if you're looking for, oh, where do I decide that this is not working? Where do I decide that it's going down and not going up? Like you said, they were up by 2%. That's not a lot, right? But then what are they overall, right? Maybe you're only up 2%, but when they had the breakout, what is that length of that breakout, right? And, earnings, did earnings come out? Was it the expectation? Did it just make earnings? What's going on? You don't think tariffs hurt these guys too, right? There's a lot of stuff that's going on that's going to hurt them. But I think with all this news and all this narrative coming out, and I think this is one of the things I think we should discuss today, is how do we, you know, go all through that crap? What do we do? And basically, it goes back to the technicals of the chart, right? Because the chart is market sentiment. Market sentiment is the traders themselves. Does that make sense?
Yeah.
So when you look at a chart, you're looking at what traders are doing. Now, I'm not an economist. I'm not that built like that. I haven't been to university. I'm a chef. That's all I am. Just an ordinary guy. So I have to put something in place for me to determine what I believe is happening. And we've talked about the 50% at great length. We've talked about the open and closes at great length on those higher time frames. And I'll give you the example on a daily chart. If I break and close beneath a previous open, close open, or a low, I'm now going to, and I've broken a trend line, I'm going to sell. I'm going to get out of the market. Because this is one rule I have, and I think everybody should listen to this very carefully. If you have money on the table, take your money. You cannot go broke if you take your money. And you could always get back in. There's always another bus coming, another train coming. But if you don't have any money, you cannot get on the bus or the train because you don't have any money to pay the fare. Right? Make sense?
Yeah,
Hopefully.
that's a good
Yeah.
analogy.
Yeah. So I think, look, in my journey, I had the same problem, right? Because we're so, I want to make money. And We've talked about being right and all this stuff, and we have this insatiable need to be right. And I was the same when I started. It's just like I want to make sure I'm being right, and it's not about being right. It's about making money, right? And it's like if you're, oh, I'm wrong. Okay, I get out and I'll wait for the other opportunity. As long as you have those set of rules that you have imparted and put to yourself, we call it the trading, your trading plan, right? And that's what that is. It's you've developed that plan over a period of time that you're going to do this, you're going to do this, and you're going to do this. And if this happens, you'll do this. And then how do you build that plan? Over time, over experience. Do you trade the same today that you did a year ago?
No, not at all.
Interesting, right? Why is that?
I think I've learned many things.
Yeah, you've developed into the trader you are today, and it's a constant. This is why it's called a journey,
Hmm.
right? And I think, we've talked a lot about, macroeconomics, we talked about data, economic data and stuff like that. And where do you go for this information? What do you do with this information, right? And I like Forex Factory, right? And you have another one that you like, right? That you're used to. It doesn't matter which one you have. It's what suits you. And my sort of thing for me changed when I started to pay attention to what the central banks and the Feds are doing. And they will tell you. And if you give me a second, I'm going to do something. I'm going to check it. I did set it up a little bit. Just give me a sec
Sure.
here. I'm going to go to. I know you can't see my screen right now, can you?
No.
No. So I'm going to go to here. I'm going to get this here. Okay. So, all right. Okay, I'm ready to go. Okay. So, if I share my screen, I'm going to go live. Can you guys see my screen?
It's
Can you see
loading.
it? Oh, okay. So quiet. Okay. Tell me when you see it. Oh,
Yeah.
that should be good now, right?
Yeah.
Okay. So here I have Forex Factory from last week, and you're going to see here on February the 17th, we had the Aussie central bank rate, monetary policy statement, and RBA rate statement, right? Okay. So I want to show you guys, we know that the central banks have a monetary policy, yes?
Yeah.
Right. That is a monetary policy of how they do things when certain things happen, like inflation is high or the employment is low, because they're trying to have a stable economy. Okay?
Hmm.
This tells you what they're looking at. So you can actually view full details of the monetary policy statement. And I'm going to go to this here because I downloaded it already. And here is the statement on monetary policy. Can you see that? Are you seeing that, what
Yep.
I've got here?
Yep. Yep.
February 2025. And it shows you exactly what they're looking at. The financial conditions, interest rate markets, other measures, blah, 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 all the stuff they're looking at, the outlook and everything. The most important part are these key messages here. This tells you what they're thinking. This tells you what they're looking at. And then say, well, okay, I see the Aussie dollar is actually kind of, they decreased the interest rate to try and stimulate the economy, but they're going to be cautious.
Hmm.
They tell you. They're telling you this. Look, what's been going on? Global policy uncertainty is high, which means things can change very quickly. And the economic environment remains challenging due to changing global trade policies and ongoing geopolitical tensions. They're talking about the tariffs, right? So if you can find out about Australia, you can also find out about all the other countries and see what they're doing. But you don't need key messages that if you like, I'm a geek, I love reading this stuff, and I think it's important that you do read this stuff, but because I think it gives you a little bit more insights. Now, where else can you go? Well, there are other places like banks have stuff. I like going to the central banks because that's the main source. I think you guys, I showed you a couple of weeks ago about I like the Cleveland Central Bank, and there's a lot of good information on that one. So I go there. You can find economic outlook for the next 5 years, 10 years. It tells you what they're looking at, what their expectation is of the inflation rate over the year, what the expectation is of rates cuts. Now, we are now down to 2 cuts possibly this year. They took away the 3rd cut because now we're getting this, battle between the Fed and Powell and Trump. They're like, no, we're not doing that. They have their job and they have to do it. So, the uncertainty is what's putting a damper on everything. And when you read this and you see this, and then when you want to put it into practice, we put that into practice by the chart, right? So
What do you
when
mean
we
you put
go
it
to
into practice to the chart?
well, once you've got a bias, once you understand, say, hey, they're looking at this. So let's say they're looking at the numbers of their CPI, or they're looking at that to see where the rate is, and they're looking at, we're looking at the employment rate. They're saying that employment is pretty robust. So we want to see that robust keep going. So when you look at their employment numbers and you see it's gone down and employment's gone up, now that's weakness for the Aussie dollar because they've told you that's what they're looking at. Does that make sense? Right. So months ago last year, and the biggest narrative was about inflation. So we looked at PCE, right, CPI, everything about inflation was looked at through a microscope. So any data that came out that infected inflationary, right, like PMI, like manufacturing and all that stuff, we looked at very, very closely. And when those numbers were negative, we reacted accordingly. Or if they were positive, we acted accordingly. Make sense?
Yeah, makes sense.
Right. Now they switched. They turned around and said, hey, we're looking good. The inflation rate's starting to come down. Everything's kind of cool, right? But we're troubled about the labor market. We need to see that go a bit. And now that's what you look at now. I'm not saying don't worry about the inflation stuff, but this is what tends to happen with people. They go to, and this happened to me. So I'll give you my experience. So look at the news, trade the news, watch the news, got to watch the data. That's what moves the market. So I would go there, right? Let me go back to my sharing my screen again.
I have a question about this because, or maybe multiple questions, because I think you by this time, after many years, you've read these statements and you watch this news and you've been following up on the latest on what the Fed of the other countries in the US is looking at. Then similar like when you open the chart, you identify the levels immediately. I think when you open this statement and you look at the headlines or you read the details, you kind of know, you develop your bias very quickly because you know what direction is taking the Fed, what they're looking at and how it's going to impact the market. But as a beginner, for me, this is new. I mean, like you see the outlook, you see they're looking at inflation, they're trying to keep inflation down, but I don't recognize right away how that affects the currency, how that makes it strong or it makes it weaker.
Of course not.
Yeah.
Of course not. Of course not. Because why? Because you don't have that experience
Yes.
yet. You haven't looked at it. You haven't looked at it. So you need to start looking at it. Now, I also want to say this. Can you see the calendar again? I'm back to the calendar, the Forex
Um,
Factory calendar.
yes.
Yeah. Okay. Now I'm going to try and give a very, very quick
Mm-hmm.
sort of overview of how I look at these things. We can see forecast here, right?
Mm-hmm.
And we can see previous, and we can see actual,
Mm-hmm.
right? The forecast is they're telling you what they expect. They're telling you what the expectation is, right?
Yes.
Now, let's take CAD for example. You see the CAD here, medium CPI year on year, right?
Mm-hmm.
They were expecting 2.5 and it went to 2.7. Does this mean that this is going to give immediate strength to the Canadian dollar? Yes or no?
I don't know.
Okay, no, I'm glad you asked that question because on the surface,
Mm-hmm.
when I read, look what it says. Actual greater than forecast is good for the currency. So if it's greater than the forecast and it's good for the currency, what's your expectation for the Canadian dollar?
To
To
be
increase in value or decrease in value?
increase.
Exactly.
Yeah.
Does that mean it's going to happen on a chart? Not necessarily.
Mm.
Do you understand what I mean?
Mm-hmm.
We have to be aware of what we're looking at. This is what I'm trying. This is an example I'm trying to give you.
Mm-hmm.
Okay, just because it's green doesn't mean to say the currency is going to move in a positive direction. They may do it temporarily, just very shortly, 50 pips. That's it. Because maybe this is not what they're looking at. Maybe this is not as important. That's why you have to look at those things to see what are the main guys looking for. Because if the Fed's looking at this, then you can say the big boys are looking at it too, like the mutual funds and all that stuff, because they're trying to trade on the right side.
Mm-hmm.
And if you look at this 2.5, look at this 2.6, 2.7, it's only a 0.1% difference. It's not a big deal. And I like to look at this side. Here's an example. Employment change for Aussie. We see this? Now, this is a huge thing. Look, 19.4K, right? Someone would look at this and go, oh my God, 44, oh my God, buying the Aussie like crazy. Hold on a second. It's less than it was previous month. Be careful.
Employment change. What can you explain what that means?
No, I'll let you
Okay.
read it right
Job.
here. Right? Change in the number of employed people during the previous month. Right? Make sense?
So there are
So you
more
have,
people employed.
well, hold on a second. Okay. They said there was going to be 19,400,000 people more employed the previous month, but it actually came out of 44.
Then
Right?
that's really good.
Yeah, is it though?
Yeah.
On the
Yeah.
surface, it
Greater.
seems
Yeah.
good. But hold on a minute. What do we need for growth? We need employment growth. But the previous month came out of 60. Have we grown from the previous month? Yes or no?
No.
So why would we trade it then? Why would we think Australia is going to be strong?
Hmm.
Do you understand what I'm trying to say here? You have to be very careful. Don't take it literally.
Then
Don't
that.
take it literally that, oh, it's going to be really strong right away. Now, I might be wrong. Let's go to a chart and find out, right? So I like looking at, you have weakness on the US dollar right here. So let's look at the Aussie indice as well. Now these indices actually relate to their currency against the top currencies. So you have Aussie here, when I can find it. Here we go, right here. Don't worry about these silly things. It's just
What are those?
software. Yeah, it's just a glitch in the software,
Oh.
right? Okay. So in this particular occasion, look how low the Aussie dollar is. And look what happened this day here. What day was this? This was Sunday, February the 2nd, right? Beginning of the month. Look how it went up here. But look what happened on, what's that, February 13th. Hold on. What day was this now? 19th, Wednesday. Here we go. Here it is, right? This is where the news came out, right? This one right here,
Mm-hmm.
right? Well, did it do much? It's actually come down. So when the actual news came out, let's just make sure and check that I'm right here. When the news came out, this news came out on the Aussie dollar. When was it? Wednesday, February the 19th. Okay, all right. So Wednesday, February the 19th, I believe, is this one right here. No, that's Tuesday. I'm wrong. Okay, here we go here. There we go. Right? That's it right there.
Mm-hmm.
Look where it was, right? Look where it went up, and look how it's come back now.
Mm-hmm.
So we're all getting excited and thinking, oh, this is going to go way up. Now let's put this to a 4-hour here. Let's see how much it went up. Right? Wednesday was Thursday, wasn't it? Thursday
Yeah.
or Wednesday?
Oh,
Yeah. Let's have a
19th?
look. No, it was Wednesday. Yeah,
Wednesday,
Wednesday,
yes.
19th. Yeah. So that was. Here we go. Is that Wednesday? Yeah. There we go here. So here, look, it got a push, right? It got a little push. Wednesday. Yeah, this is interesting. Wednesday. This came out Wednesday, yet why is it going down? Right? Actually, what I'm saying here is this, is that was, even from your point of view, oh my God, that was really big. That was a really big difference. Yet it didn't push up much, and then it ended up coming back down. How does that work on the currencies? Let's have a look at it. This is an index that covers the Australian dollar against the other top currencies that it trades, right? Like Great British Pound, Euro, USD, all those, right? So let's look at it from the Aussie USD. And even with the Aussie USD and the USD not having a little problems, look, it ended up coming back now. This is US strength here, right? So this push that we thought was going to happen, that we couldn't have, went up a little bit temporarily, like I said, and then came back down. So you have to be very careful with news.
Mm-hmm.
The data comes out, act accordingly, take your money and get out. So that's what I'm trying to say. Hopefully I articulated it well.
It makes sense.
But it's about creating that bias by using that information. We can clearly see market sentiment of this currency on the 4-hour chart from February the 13th, right? And, well, even to here, to Wednesday, we were in a range, right? This market that news probably broke us out of that range. But look what happened. We're come back. We're back into the range again. So if you'd have bought here on that and said, oh, it's going up, oh, really going up well, it's going up a long way, let's put it to a daily. Right? Oh, look, we broke out. Woohoo! Remember what I tell you when you have a breakout of something, to wait for the retracement before you continue on?
Mm-hmm.
Look at this right here. So it broke out. We're all excited. We got news that's telling us, oh, positive on the employment. This is really good. And yet the market comes all the way back here. You will learn these things over time. But you've got to start somewhere. And you've got to start looking at that information to help you.
Mm-hmm.
And I mean, you have this right here. Right, this over there went boom up there, and now it came back down again.
Yeah.
So you've got your trend line guiding yourself. So now what? Well, let's look at these rules. We have, what do we have here? High, high, high. We have resistance, right?
Yeah, it looks very, very, very nice
Yeah,
resistance.
right. And we have support down here. So we want to be above this. We want to close above. Did we close above here? We did. But if
Yes.
you'd have traded this right away without the rule to wait for a retracement, you would be crying right now, right? So if you wait for has the retracement happened? Yes. So can you put a pending buy on that high? Yes, but now no. Why now no? Because you've now closed down back into that range.
Mm.
Does this make sense?
Yeah, makes sense.
See how those simple rules have protected me from making a mistake based on that news.
Yep. Yeah, I can see.
Hopefully that's clear. So let's just go back a little bit and talk about where you guys can see these news. Look, it says news up here, right?
Mm-hmm.
News. Look at all these things that you can read and talk. Now, some of it's gobbledygook, right? You don't need to read a lot of it, but some of it is good. Some of it is there that you can look at it and say, hey, this is pretty cool. Let's see if we can find something, right? So I can. How did the U.S. economy? Tony Hawk. Who cares about Tony Hawk? Who cares about that? No, there's not much here. But you know, week ahead tariffs loom. We can read stuff like this, right? BOG isn't fretting much about rising bond. This is interesting because Bank of Japan is very reliant on yields, bond yields.
Mm.
So this is good to read about this stuff, right? And here, HSBC and three other banks fined over 100 million for trader. I love shit like this because it just goes to show you sometimes
What is
that
trader
this
collusion?
well, they're there talking to each other. They're colluding. They're saying, "Hey, if you buy this, I'm going to buy this," and
Mm.
insider trading type deal,
Mm.
right? I mean, it goes on all the time, but
Mm.
they got caught. So and here's I remember reading this one. There was some guys from London, and some big firms got fined, and they got fined. It was like a lot of money, 200 million, I believe it was. But then they put it in perspective. It was a day's profit,
Mhm.
1 day's profit. Like for crying out loud, it's just like it's nuts. Bank of Canada sees trade war permanently cutting output by 2.5%. This is from Bloomberg. I don't mind Bloomberg to a certain extent, but sometimes they're in it just for entertainment, so be careful, right? Still seeing if I can get more here.
Can we see after this one? Can we see what's the calendar for next week? What are the
Yeah, I'll
key?
show you the Canada. It's a little bit lighter this coming week than it was last week. So, and I only mark the red, guys. I don't lie. I don't really look at other stuff. Sometimes I check for this for speeches, right, and holidays. I usually do all this at the beginning, apply and see what have I got. Nothing. No. Nothing. No. Not interested. No. Not interested. No. Nothing. So then I go back, make things a little easier for myself, and get rid of these because it's minimal impact. So why drive yourself crazy? You don't need to. Trust me. And just apply the filter. And now this is the important news. Now, out of all this, the German federal elections are very important, right? Because that stimulates how Europe is going to go. So you need to. There's not much we could do about it. We would just monitor it, right? We don't
Mhm.
want a surprise. So out of all this, what's the most important? What do you see that's the most important? You tell me.
Sure, I'll
What
tell you.
one jumps out at me like crazy.
Mm, PCE. I would say
100%.
PCE, and
Yeah.
why not consumer confidence? That means how the consumer is feeling on spending, no?
Well, yeah, I guess so. But
But core PCE is more
the,
important.
yeah, let me just kind of like A survey.
Uh,
So if you have a survey of whom? If you have a survey of people that are earning over $200,000 a year, as opposed to somebody that's barely making the minimum, how is that survey? We don't know who they included. We have no idea, right? I don't really, and really, 3,000 households
yeah.
survey to give confidence? Give me 300,000. Give me 3 million. Then maybe I'd listen to it. Sorry, I'm just being honest here. In my experience, that doesn't really cut it.
Why? Sorry.
I've never seen the market move largely when this has come high or low. I've never seen it. The VIX different, but not this.
The bigs.
Yeah, it's
The
the fear, the
volatility.
fear, yeah, volatility, the fear of the market. But yeah, I think you hit it right. I mean, we've got German prelim CPI for Euro is good too. Unemployment as usual for the US. Great GDP. It's okay. I mean, it's not really going to move much, really, is it? It's just going to tell you what we already know. But this one here, core PC price index, and look at what they're expecting. Last was 2% month on month, right? Look, now they're telling you it's point. What have I been telling you for the whole year? We still have inflationary issues. Have I not been saying that?
Yeah. X
Well, now they're
expensive.
Well, I think that's because of the bird flu, right? So, but prices have not gone down. So now, look, we're getting a 3% here, 0.3%. So manufacturing is another one I like to look at too, because prices in China is key. People don't think China is a key component. If their manufacturing is not operating, their economy is slowing down. So we need to be aware of that. And that's going to affect Australia, New Zealand, and it's going to affect America. If you don't think it's not, it is. It does. Because they're a very key trade partner. And they need to stimulate. They need to get things going. So I would expect this to be up to 50.5 or 51. I wouldn't be surprised. So these are the ones we look at. And the most important one, I would say, is probably Friday, is the PCE, just like you said, because it's all about inflation. And we'll see what that number is. What if this comes at 3.2? Now it's like, even with this, FOMC, they're saying, inflation is coming down, but it's not coming down fast enough. I've been saying, it's like a Goldilocks economy. The economy was strong, it's booming, but the inflation isn't coming down. It's just sitting there. It's just doing nothing. But eventually it's going to crash. And we're starting to see the remnants of it. That is starting to happen. Whether it'll continue, we don't know. We'll see. And it's been boosted by Trump's, tariff stuff and all that kind of talk. But let's get back to the subject at hand about the journey itself.
The
right?
journey itself, yes.
Yeah, you said, okay, how do I do it? This is what you look at. This is what you read. You look at these things. And I tell you, when I really got serious about trading, I would look at this and I would, I'm going to pick the course of this PCE right here. So this tells me what it's all about and why people care and what it was before and all this stuff, right? See, it gives me all the dates of what it was before. And I pick out things and I go, okay, so the last time it was at 0.3% and then it came at 0.3%, so it was November of 25. What happened when this came out? Do you understand what I mean when I say what happened? I will go back to a chart and I will check to see what happened. And I will go back and to this one here. Oh, look, it said, what happened? Was there a big movement here? Was there a big movement here? Did this news move the market? Do you understand what I mean?
Yeah.
And then look at December 2024. The previous was 0.3, November. They were forecasting 0.2, and they went to 0.1. That's quite a differential. So this differential, I want to see, did that move the market? Now put it into today. Look, it said 0.2. They're saying 0.3. What if it comes at 0.4? Is that going to move the market?
Most
because
likely.
the forecast was higher than previous, but the actual was higher than the forecast.
Can you
Does that?
click? Can you click on the right where it says graph? What's the
Yeah,
graph?
I'm actually gonna do that in a sec.
Sure.
So you want to have a reason for looking at it. The next step is the graph. So well done, right? Because look at this over here. Very bad. Not, yeah, you've got some drops here, right? But look at the increase wasn't as great. Then finally it increased. Came back down. Now you have this big increase here. So I like to look back. So let's say I look over, let's say I'm around here, right? And I go, oh, look, it was high here. It came right down. Oh, wow, what is this? Yeah, this came lower, then it came lower. But then we had 3 months of exactly the same, and then it went up. So I would tend to say, oh, this could be interesting. This could have been a big move here. I don't
Wait.
know. I'm
So,
just looking at.
sorry. Just to quick question. The this is PCE.
Yes.
The bigger, the better for the currency. Is that correct? Because it says actual greater than forecast is good for currency. So if it's 0.4, if it's 0.3, it's good. It means it's non-inflationary.
No, it is inflationary.
It is.
However, yeah, let's just start at the beginning,
Yeah.
right? First of all, we're trying to see if it's going to make the effect that it's telling us on the currency. We're only going to look for the possibility that this is going to make an effect if this is 0.4, because we've got a differential. So that's the first thing. And if we look at previous, but look at this one right here, see? 0.3, 0.3, right? 0.3, 0.3. So it hasn't been above 0.3. This is what I was trying to get to you. It hasn't been above 0.3 since March of 2024. If it goes 0.3 just over, that is good. If it jumps over here to 0.4 above this one, which hasn't been there since February 2024, now that's a big thing, right? Now that is a big move. Now what is that going to do for the currency? Well, forget inflation for a second. If we have more spending, right? If we have a higher demand for the US dollar, right? Is the US dollar going to increase in value or decrease in value?
Increase.
If you are an outside investor, are you going to invest in US dollars?
Let me think.
Based on that information that you just got.
Okay. Wait. So you said if we have more spending, if we have more money to be spent, someone from outside wants to invest. That's the question.
Yeah, so if I buy US dollars, the expectation is the US dollar is going to increase in value. So that's good for me, right? Because if you have inflationary and you have these things that are going up, what is the central bank's response is usually to increase interest rates. If they increase interest rates, my return will be better. But if I buy at 1053, my expectation is I can get up to 10515 and I've made some money. Because we're not talking about a couple of $100 here. We're talking about a few $1 million here, right? You see the difference? But because they invested in there, it's going to push the value of the US dollar up. The US dollar is going to gain strength. Does that make sense?
Yeah, makes sense. Makes sense. Makes
Right.
sense that you're explaining it to me like right now, like like ABC. But I think I need to spend some time myself, like putting I don't know, just reading what this is all about and how is it affecting, because like I have to do
That's my
extra.
whole
Yeah, have to do
yeah,
extra
but that's
effort.
my whole point. That's my whole point about this whole exercise. Is
Yeah.
this is what people need to do. And you just hit the nail right on the head. You got to spend more time in reading that stuff and looking at that stuff and trying to decipher it and understand what it does to the market.
But
When you have that, and then you have those, you know, lines in the sand on the chart, and you put all that together, it's going to be very powerful. It's going to be extremely powerful. I will tell you this. You can ask me a straight question. Do I trade news? The answer is no, I don't. I never sit here on a Friday or news day and sit there and wait for the news to come out to trade it. I don't do it. Why? Because I have a pre-bias. I know what I want to do. I know where I want to go. If the news comes out, I typically wait for 1 hour for all the shit to settle, and then I'm either trading the way I want to trade, or I'm waiting until it's going the opposite way until it settles for another opportunity to trade. Does that make sense?
yeah, makes sense.
It is so stress-free. It is much better. But a lot of people, and my new students are the same thing. Yeah, because it's going to drive you nuts. No, I used to
You
get
just
up.
cut out, but yeah, I kind of understand that
Yeah.
you only trade with your bias, not with the news.
Yeah. So I used to get up early in the mornings. I used to get up at 4:30 to start studying the charts and setting my charts up for the news to come out. And I used to non-farm payroll. So I used to trade Euro, USD, US CAD, US Swiss, Great British Pound, USD, Aussie. The six currencies, line them all up there, put on my levels, and put it, yeah. The news comes, oh, go, and I start buying or selling, and then the market's whiffing and whacking and going all over the bloody place. You know what? I very rarely made money. It's like, and yet, holy shit, if I'd have waited, that eventually went there. And I started to learn. I started to say, why? How can I do this? And I read people say, don't trade the news. Don't do it. People would say that. Say, no, it's just for suckers. There are people that have strategies that trade the jump for 50 pips. So they set everything up. It's good news. They hit the button. It goes 50 pips and they're out. And they've made, 400-500 pips. That's good for them, right? But in the overall scheme of things, it's too stressful. I used to hate it. Because how many times that the news has come out good, positive, everything's lined up, yet the friggin' market goes the opposite way.
I heard someone said sometimes good news are bad news, or sometimes bad news are good news, or sometimes good news are
Yeah.
good news. It does it's
So
just
why does that happen? That's the question you
yeah,
should
that's a
ask. Why
question.
does that happen? It happens because the market itself, market sentiment that I've talked about, the traders are not drinking the Kool-Aid that was offered.
Yeah.
Here's an example. I'm going to go back to the chart here, right? So I'm going to say this. Let's talk practical, right?
Mm-hmm.
I'm going to use this level right here, right? I'm going to pretend that the market is don't this is the high of the market. I'm going to say to you, we're here,
Yeah.
right? And the news came out that it was good news. So what should we do? We should be buying, right? But
Mm-hmm.
are you buying here?
Probably not
Look, you're on
buying
the
at
top of
the
the
highest, no.
yeah. You see what I'm saying? You're at the top of the range, right?
Yeah.
We have to be conscious of where we are in the market too. And because what happens is people say you've got to understand macroeconomics, you've got to understand the data, the fundamental data, the economic news. You've got to watch that. That's what moves the market. Not all the time,
Mm-hmm.
right? Because there is a sentiment. This is market sentiment. Market sentiment, for whatever reason, has said this level, we don't want the price to go above there. It tried to, and then it came back down. So if I'm up here, I'm looking for news to be bad so I can sell it. But if it's good, I'm saying, oh, well, get out of the way. But I will draw a level right there and say, I want it, once I've broken there, I'll sell it off. I'm telling you, guys, you have to understand how macroeconomics work. You have to understand how the fundamentals work in tandem. You've got to understand what the Fed's, the central bank's monetary policy are looking for. I know it takes time. This is a journey. You have to put yourself out there and start reading about stuff, and start learning about stuff, asking questions. But you have to put it side by side with technicals. This stuff. Three pillars. What are they?
Fundamentals,
Macroeconomics, fundamentals,
technicals.
technicals, market sentiment. The third pillar is you. You yourself. How do you go about doing this? How do you go about spending your time? How do you go about learning? How do you go about understanding how the fundamentals work? You only get out what you put in. I used to use this analogy with my two sons, and I used to say to them when they would have problems with their homework or problems at school or struggling, I would say, how much work did you put in? And did you do the work? Yes, Dad. Yeah, yeah, of course. I said, okay, do you understand what you put in is what you get out? And they go, okay. I said, so if you go to the pop machine and you put in 50 cents, yeah, back then it was 50 cents. If you put in 50 cents, would you get a pop out? They go, yes. I said, right. But what if you only put in a quarter? So my oldest one says, no, I won't get a pop. My youngest one said, no, but if I kick the machine, I might get one. Oh, typical kids, right? And I go, no, the point is that if you put in the right amount, you're going to get what you deserve back.
Mm-hmm.
That was my point, right? So if you don't read about stuff, if you don't read articles, if you don't look at monetary policy, how are you going to understand it? How are you going to use it with your trades and understand what they're looking at? Do you know, I'm going to tell you what happened to me once. What happened to me once was these two guys were with me, working with me, and I kept telling them, don't trade the news like you're trading. You just need to develop a bias, understand what this news is doing, understand what it's all about, right? Now, they started to create this, I'm only going to trade the news. I'm only going to do fundamentals. And it was a disaster. And it's like they said, you told us to do this. I said, yeah, in tandem with this.
Mm-hmm.
There's two things. We talk about price action. We talk about ICT is another method of trading, right? And it's basically using institutional levels, institutional pricing, daily price action, right? What is price action? It's the movement of price over time, creating a pattern. This is a pattern, right? It's coming up here, right here, and it came back down. Tried to come up again, came back down. Went up again, came back down. That's a pattern. What has it created? It's created a resistance level, right? This is price action. I'm down here. Am I trading? No, I want to go up to a level. What level can I go to? Well, here's a level right here. Look at that, right? There's a level, right? And then there's a lower level. This level right here. Did it hit it? It stalled, but it went back up again. In between this area right here, right, is a level where you can look for possibly selling, for the market to turn. So if you're down here, we want the market to go there before we think of doing anything.
Mm-hmm.
So what do we look at? Well, if I'm above this level here, I'm buying, unless I have a bias to sell. If I'm below this level here, I'm selling, unless I have a bias to buy. Does that make sense?
Yeah, makes sense.
And how do I create those biases to buy or sell? Through the news,
Experience.
fundamentals, monetary policy. Well, yeah, okay. But I mean, you create those biases by, looking at what the Fed is doing. And I am a big proponent on levels. I'm a big proponent on open close. We looked at Meta, right?
Yeah.
Yeah, I know. Okay, I'm a human being, and you don't think, where did I find it? Where was this? You don't think I got excited when I saw this? Because if a bunch of people listened to the podcast last week and hear me bang on about how excited I was and this is going to go down and this is incredible, this is awesome, and look what it did. I have an ego, I'm not going to lie. I was smiling and grinning from ear to ear because I didn't just say, oh, you could do this. I said, if it closes below this line here, it's going down. That's what I said. And I clearly pointed out what was going to happen. And I still think it's coming down here. That's where I think it's coming, right? At least here anyway. Actually, let me correct that. There's around about this level right here. 50% of this candle.
Hmm.
That's that, and oh, that's a good guess. Look at that. Oh, I got that right on. Look at that. No, did I? Yeah, I did. Look at that. I got it spot on. Wow, good deal. So, yeah, do I believe it's coming in? Yeah. Now, I will say this. Do I think that there's a possibility it could go back up? Yes, I do. 1, 2, 3, 4, 5. This has gone down. This is from the high to the low. We've got 5 candles here. So there is a good possibility that it could go up a little bit. Where to? Well, first, right there, right? Because you got some lows here on close, right? Another one would be this one right here, just back up to there, right? So how many candles do I want here? Probably 2. So for 2 days, we might see some up movement. Why? Well, if I'm in this, if I've sold this and I'm making money, I'm getting out because my rules, right? I like to trade the swing, which is from a high to a low. I want a retracement that has a lower high, and then I want to have an extension to a lower low. That's what I'm looking for. So my expectation, because from the high to the low, I require a minimum of 4 candles, and I've got 1, 2, 3, 4, 5. I'm saying, well, I don't want to tempt fate right now. I don't want to be, I don't want to give all my money back. Now that's just me. You guys, you out there, you may be comfortable saying, no, I'm going to sit out. I think your rate is coming down here, but I'm not going to get out. I'm going to leave it. It's fine. It's up to you. That's your decision. But and I'm not in this, by the way. I didn't trade it, so I want to be very transparent. But if I was in here, I would have closed out Friday, and then I'd wait for maybe it goes down low. Yeah, you may be right. Maybe it keeps going, and I'm screwed myself, and I've lost this. Yeah, maybe. But I like to be my casino, and my casino has rules, and my rules are as follows. So I follow them to the high probability. Now, what could happen? If this stalls here, right, it stalls around here, after that I wait, I draw a trend line along with the lows and wait till it breaks and then trade back down. That's what I do. But this is what I'm expecting to happen. So there you go. Let's see if it happens. Now, what happens if this goes up and up and up and up and up and up and makes a new high and starts going on? I'm wrong, right? But did I lose money?
Well, you're not in the trade.
No, I said if I was in this trade, I would be out now,
Uh-huh.
and I would wait for this to happen,
Yeah.
and then draw a trend line on the lows for it to break, and then pass down this, and then I would keep selling. But if it doesn't do that and keeps going, I'm not losing money.
Why not?
That's what I'm trying to say. Because I'm not in the trade.
Oh, okay. Yeah. You wait for that level to hit. Okay.
Right. So if I'm in this trade now, and then it went back, and it went back, and then it went back, and then it went back, I would have lost all this.
Mm-hmm.
You
Yeah.
understand?
Yeah.
But because I'm following my rules,
Mm-hmm.
right, I've created, I am out of the market. And I can simply, things like, well, what if it doesn't do that? Yeah,
Mm-hmm.
all right, here we go. Here's a simple trend line. Rule, if I break that trend line, that pink trend line,
Mm-hmm.
if the market breaks past that pink trend line, I'm getting out of the trade.
Mm-hmm.
So I haven't won my total money, but I've won most of it. So you put these rules to protect your account. Now, we talked about stop loss, right?
Mm-hmm.
Let's just say my stop loss is above that high. Can we say that?
Mm-hmm.
Right. And we've made this money, and now I'm down here. I can take this and move my stop loss to here, to this above this high, right? You can move it above that high, have a tight stop loss if you want, move it wherever you want to lock in profit.
Mm-hmm.
So it's the same thing. I move my stop loss, and when the market goes, it goes, and it stops around. That's fine. So I've just given you three components there. One, get out because you got five lows, five candles from the high to the low, right? And you expect a retracement, right? The second one, I'll move my stop loss to protect profits. And if it hits it, oh well, I'll find an opportunity to get in later or the break of a trend line. So giving you two ways to protect your account that you don't lose all the money by moving the stop loss or trend line, or using the take all my money and wait for an opportunity to get back in.
Mm-hmm.
Does that help?
Thank you very much. Yeah. I think I'll leave some time to see what happens with Meta before I trade it again.
Yeah, you don't want to sell it right now. You don't want to buy it right now, right? Because yeah, you're low, but it's not telling you anything that this is a ripe for a buy right
Mm-hmm.
now, in my mind. The only time where I would consider a buy, and this is not financial advice, but is if I'm above that close high right here.
Mm-hmm.
And what I mean by that, I would want to close above it, and I would want to test, and the test hold, and then I would buy it. That to me is now it's buying. So I think the important point of all this is developing my rules,
Mm-hmm.
developing those rules over time. So hence the trading journey, hence the name, because you have to understand it is a journey. You've got to start somewhere. And I think you said it a few weeks back where you said the big thing is to just start, right?
Mm-hmm.
And yeah, if you start, that is good. You need to start, but it's more importantly to start the right way. Does that make sense?
Makes sense, yeah.
Yeah. So starting the right way is, where do you get your information from, right? What do you need to read? You're not going to get it. You're not going to understand something right away. You're not. Hopefully that's what we're here for. You can read something and say, well, I don't understand that. How can I get a better understanding?
Mm-hmm.
Right? You can send us in, hey, I read this. What does this mean? Right? Interpretation is everything, right? And so when we use the technicals with that information, you can get a better picture for yourself. But look, along all this, if you have really, 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 really rock solid risk to reward parameters, it doesn't matter. You just make sure your risk is as low as it can be versus the reward. So don't risk more than you can, don't risk your whole account, right? Risk just 2% max, 1% max. I like a loss of 3% over the period of my total account, right? But it doesn't mean to say I trade at that whole 3% on one trade. So whatever amount I have in my account, I calculate 3%. And I calculate that and I go, if I lose this, I don't trade. So I'm not going to risk the whole thing. I'm going to take 3% possibly of that 3%, or I'm going to take 5%, or I'm going to say, what trades do I have? What am I looking at trading this week? maybe I have 3 or 4 or maybe 5 opportunities. And I'm going to say, okay, so I'm going to divide this up. I'm going to take 50% of it and I'm going to divide this up into small things. Or I'm going to find my top 3. And I think this one is better. So, you know, your risk, has to be very kind of like controlled. So okay, worst case scenario is I'm losing this money. I'm losing $1,000 or $2,000 this week, but that's as far as it goes. And you also have a target too. So if you make 3,000, 4,000, maybe it's $100, $400. I used to have in my trading plan, if I'm trading and I hit $100, I get out. Don't matter where I am, I get out. And you could say if you do 3 trades a week, right? And one hits its target, right, of $100 all the time, right? So one hit $100, one lost, so that would be maybe say $40, $30, right? And then one was just above, so maybe I made $60. $50, $40, $20, break even, whatever it is. So I'm making an average of $80 a week. Compound it over time. Compound it. So $80, maybe I have a bit of a lesser, so I only want $50. But you keep multiplying that over time, week 1, week 2, week 3, week 4, week 5. It stacks up, it multiplies, it gets better. And remember, that $100 will turn into $150 because you now can increase your reward, right? Because your accounts got bigger. Now, this is how you trade, guys. This is it. It's not this, nutty sitting there. I know lots of people like the adrenaline rush of sitting on their computer or on their phone. Oh my God, I don't understand how people can analyze markets on the phone. It just drives me nuts when Isaac comes down with his bloody phone and says, "Oh, what do you think of this?" I said, "Get that out of my face, man. I'm not going to tell you something over a phone. How the hell can I see?" Right? Yeah, I'm blind. But the point is, you need to look at the big picture. You need to see what's happened in the past. You need to look left, right? Look left. Market leaves clues. Can't remember who said that. Some trader I was with. It was great. So the market likes to repeat itself, but not all the time. so, there's great sayings, but at the end of the day, you just got to find what works for you, right? And what you're comfortable with. And I can show you, in my experience, what I have learned, what I have seen, how the market moves. People ask you, "Do you trade this way? Do you trade?" No, I just do what I do. I look for levels and I use Fibonacci and trade it to there. That's it. I use trend lines. That's what I do. It's simple. It's easy. So, is there harmonics? Is another, patterns. Harmonic patterns like butterfly, shark, Gartley, all this kind of. There's tons of stuff. I can show you tons and tons of stuff. And there are some people that are strictly harmonic traders. They love it. It creates a pattern, they can see it very clearly, and they have defined rules, and they trade it accordingly. Brilliant. So there are people that just trade triangles. They trade ball flags. They do what they do. The W and the M is double tops and double bottoms. Head and shoulders pattern. There's people that trade strictly head and shoulders. However, why don't I like that? I don't like to go to a time frame and look for a pattern. I want to know first what's the overall bias, what's the overall trend, what is the current trend, and if I'm looking for something that will turn into a head and shoulders, that's now confirming that I can get that move. So instead of looking for the pattern, I use the pattern as the confirmation. So it's a little bit different. So it's just the way I like to roll. 10:46. Ooh.
Yeah. 1 hour and 16 minutes in.
Yeah.
Yeah, I guess I'll stay. I'll take a step back and maybe
Well, well,
redefine
we did
my
have a
my
question.
trading plan. Hmm?
Yeah, I think, yeah, you do. You need to record. This is all about why I talk about the daily journal, why I talk about writing about your day. What did you see? What did you hear? What did you look at? What did you study? Where are you in this grand scheme of things? And at the end of the day, I know I've had this question a couple of times. Should I get a mentor? Should I do? Yeah, you should. You should get a mentor. Because, and I'm not just saying that because we don't have anything to sell. I'm not saying that. I'm saying this. If you look at any aspect of work or in your life or your career or sports or musician or whatever, having somebody to mentor you and coach you and be by your side is only make you get better. So even at work, wherever you have worked, you have somebody that puts you under their wing.
Hmm.
Somebody is your go-to person when you have a question. They say, "Oh, can you help me out?" They help you out, and it's the same thing. So, yeah. Now, unfortunately, getting true mentorship, there's going to be an investment financially, not just time, but financially. And is it worth it? 100%. 100%.
Hmm.
It really depends. Are you doing this as a hobby? You just sticking your toe in it, just kind of doing it? Or are you doing it just to be part of everybody else? Or are you doing it because you're in love with the idea of being a trader? Whereas, oh, what do you do? Oh, yeah, I trade the markets, yeah, 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 right? But you're not really serious. There's a lot of people that come through. I just say, "Can I get your help? Were you struggling?" "Yeah, I'm struggling." "Why are you struggling?" "Oh, this, that." "Well, how do you go about your day? Tell me what you do." "Oh, I just go to the 15-minute chart and I look to see." "Really? Have what's the news? What's monetary policy and what's the set?" "Oh, I don't know." "Right? Well, what moves the market?" "I don't know." "Okay." So you haven't really prepared very well. You haven't really got a plan. "No, I just watch price action. I watch the price." "What does price action mean to you?" "Well, it's where it goes." "No." "What does that mean?" They didn't even have the right definition of price action.
Hmm.
So it's they haven't prepared properly,
Hmm.
hence no plan. And they don't want to do the work. It's not easy. If trading was easy, okay, let's reword it. Trading is easy. It's the other stuff to get you to
Be a good trader.
belief. What you're doing. It's the work ethic, right? It's the everybody knows how to kick a ball, but does everybody play soccer? Can everybody kick a ball to make a good cross? No. How come that guy can do it or that girl can do it? Because they practiced, right? How come not everybody can go on a golf course and hit a really good drive? Maybe they haven't practiced as much as other people have, you know. Some people are prepared to put in the work, and some people are not. Yes, there is a level of talent. There is a level of natural talent. There is all this levels of stuff. They're just made for it. Yes, they can. They have the capacity to get air in their lungs better than me. Yeah, there's all that. But at the end of the day, what separates the superstars and the ordinary people is that gap of work ethic, right? I have met traders that will study and put things in, but just cannot put it together. They just can't put it together. I recently had somebody come to me last year and said, "This is not for me." And I congratulated him. I said, "Well done." He goes, "Oh, I thought you'd be mad." I go, "No, shit, it's not for everybody. It's just like cooking's not for everybody. It's just like technical work is not for everybody. It's just not, laboring is not for everybody. You know, sometimes people doesn't like a car because of the color.
Hmm.
It's just the way it is. So don't beat yourself up if you're struggling with trading and you're frustrated. Just look for another way. There's plenty of ways, plenty of places where you can go to put your money, like Wealth Simple. There's a bunch of them out there, right? I'm not sure in the States, but uh, I know we have that in Canada, right? Where you can put money in there. You can go to the bank and say, "Hey, I want to open a mutual fund. I want to open a GIC." There's ways you can invest and get into the market, right? Uh, you don't have to be a trader. to benefit. Does that make sense?
Makes sense, yeah.
Yeah, you've got to be prepared to put in the work. That's it. And, it's not as bad as it sounds, right? But if you get up, here's the thing for it. If you get up every day and you take $1 and you put that aside, at the end of the week, you'll have $7. If you take that $7 and you put that in another jar, and 4 weeks later, you'll have $28. And if you just keep doing that, at the end of the year, you'll have a bunch of money. And you'll have more money than you started with. But if you didn't put it aside, you wouldn't have it. Same thing with learning something. If you start learning it and start stacking that knowledge and start growing and stacking it and stacking it and stacking it and stacking it and implementing, take action, right? Don't just talk about it, do it. Do it on a demo account, write it down once you've got the results, and start to slowly understand the concept. Slowly start understanding what's going on. So, it's very rare that, 6 months from start to learn this, that traders are successful. If you don't think I lose, you're crazy. I do lose. And if you don't think I make mistakes, I do. I'm human. I make mistakes. But the difference is I don't cry about it. I don't whine about it. I roll up my sleeves and I get back to work. And I go, I knew I fucked up. I knew I made a mistake. I can't do that next time. I got to do this. I got to follow this. I got to follow this. There's one thing I don't do. I don't just jump into the market. On the weekends, Fridays and today, I start setting up my week, what I'm doing. So when I come Monday, I know what I'm looking for. So that journey starts with you understanding central banks, understanding monetary policy, understanding what the important fundamentals are to affect the GDP, which is gross domestic product, because gross domestic product is what defines the economic situation of a country. And the economic situation of a country defines how its stocks are doing, how the yield is being offered, right? How the people are growing and having money to spend, because if all that is stimulated properly, you know that that currency is doing well or is not doing well. So do you have problems with inflation? Do you have problems with lack of employment? We need to lower the interest rates so businesses can spend money to create more jobs, et cetera, et cetera, et cetera, et cetera, et cetera. This starts giving you a wide understanding of how things happen. When we have an event in the world, like the World Cup, Olympics, where are they? Like, where is the next Olympics? Where is the next World Cup? Those are great events where there is a high probability that you can make some money on an increase of a demand for a currency. For example, let's say everybody comes to Canada because we have the Winter Olympics. Well, we are going to get a demand for Canadian dollars. So that means there could be strength for Canadian dollars. So if they turn around and go to Mexico, same thing. Mexico peso will increase. This is just logic. Use logic. All right, speech over. Makes it, hopefully it makes sense.
Yeah, completely.
Did you have a question? You said you had a question. I kind of steamrolled you. Is it a quick one or not?
I think we cover everything. I don't. Nothing comes to my mind right now.
Okay, no good then. All right, and I think that's it for today.
Yeah.
Thank you very much for joining us, and those for with us, and hopefully you enjoy the recording. And please send us questions. We want to help you. We want to help you on this journey of yours. And I know it's daunting sometimes, but if you could sort of, learn to just take a step back, just take your time, and be patient, be focused, be mindful. You will succeed. There's no doubt in my mind. One of my old mentors said this: if a Mexican, you can, and he was from Mexico, so that's why he said it. So he was very, very, very good trader. He's no longer with us, unfortunately. He passed away just recently. So, but it's true. But again, you just got to put in the work. That's it. All right.
All
Same
right.
time. Same time next week. We'll see you all then. Have a great
Exactly.
one. Thanks a lot. Take care. Thanks, Isaac. Talk to you soon.